Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's Friday, February 12th. It's the last day of the second week of the second month of 2021. How about that? Let's get into it right now. That's what I always say, no time to waste. And if you've noticed, I'm not in my usual location. I actually took my wife out for a Valentine's weekend little getaway. We're at Miami. I'm actually staying at the presidential suite at Lowe's. This thing is amazing. We got a Peloton bike in this thing. I mean, there's an exercise room in this suite with a Peloton bike. Don't ask. Unfortunately, I don't use Peloton, but if I did one day, it's good to know. So let's talk about the markets. First of all, overnight data is light. Markets are weaker. I hate to say I told you so, but I told you that this market is going to start giving up a little bit. The put-to-call ratio is extremely stretched out. Every indicator on this planet is screaming a minor pullback. I think we're getting one, and this is very, very good for the market because it'll allow the market to stretch out and kind of pull back. Because once that rubber band stretches out, it's hard for the market to gain any elasticity and actually gain a lot of upside or downside. So in order to have good, clean, sustainable momentum, we want to see the put-to-call ratio down, not as stretched out, so that the market can sustain itself and continue moving forward. Now, in terms of news, not much news today. We got most of the news yesterday with the jobless claims that I've already explained and discussed, but I'll talk about it again in case you missed it. So markets are lower overnight. Most Asian markets are closed for the lunar holiday. Investors are hoping for a new round of U.S. government aid as economy recovery falters. It's not doing as well. And somebody on this chat who's talking right now told you about that. I told you exactly that was going to happen because healthy Americans are not getting their COVID vaccines just yet, and they're not getting them in time. The latest U.S. government report, jobless claims, reaffirmed that employment remains a weak spot in the economy. We talked about that yesterday. We were actually here live at about 8:30 when the jobless report came out. The numbers were not tight. We're still hoping that the pandemic is going to loosen, or the number of people who are getting it is going to decline, and the workforce will get back to normal, because right now we are not there, folks. Investors have been encouraged by solid corporate news. We're now about 2/3 done with the earnings for the S&P 500, and so far the numbers are substantially better than expected. Keep in mind, they've been revised lower. Now, here's the part that I was talking about yesterday and the most crucial report this week. Number of Americans seeking unemployment fell to 793,000. Now, it's better than the 865,000 or 848,000 moving average. But again, this is very close to the number that we were seeing a year ago. Not a year ago, about 11 months ago or 10 and a half months ago. We were at 965,000 less than a month ago. So, and then we went to 700. It's been going between 700,000 and about 950, 965,000, but it's not coming down. And if it can't come down, we are going to be in big doo-doo. Because think about it. If people aren't working, who's going to contribute to the economy, and who's going to spend money? And if people don't spend money, GDP can't increase. It's very, very simple. Remember, retail sales accounts for for about 75 to 80% of the GDP. Now, as I mentioned, the stock market. Let me give you some support and resistance levels on the S&P. If we go lower, let's go to intraday. This is 1 month, and this is an intraday price level. There is a lot of support. Write these numbers down. This is the SPY. If you're looking at the regular the S&P 500, not the SPY, not the ETF, just add a 0 to the numbers that I'm telling you right now. So there is major support and a possible vulnerability spot right around the 377 level. If we can break the 380 level or the 3,800 level on the S&P 500 or 380 on the SPY, there's a good chance we're going to go to the 377 level. I think the market is stable right now, and I think if you look at it on a daily chart, the major support is still at the 375, 376 level. That's where you're going to have to worry. If we break the 50-day moving average and go to 375, there's a good chance we'll hit the twilight zone, but for now we're still stable. Although the market is turning the corner And I think we're going to go down a little bit for a few days. We need a little bit of a distribution period. Now, in terms of assets to trade, the bond market looks like it's a short position trade. Now, I told you that the long bond is moving lower, which means interest rates, long-term rates, are potentially going higher, or we are going to see some inflation, higher interest rates. The curve is lengthening. Short-term rates are staying stable, but the longer-term rates are moving out. So if interest rates go up, bonds go down, and bonds are going down right now. Now, this is a 4x4 pattern. That's when the market makes a 40-day or a 90-day swing low, and then moves up for 3 days, and then moves down. So it looks like a trend is coming down again, and I would be a seller right now at these levels, or if you want to be on the safe side, wait for it to break below 147. And this is the TLT ETF. And you could also trade the TMF, ticker symbol TMF. It's triple leveraged. But I think bonds are setting up for a short trade. So I'd be looking to sell on a stop right around the 147.80 level, and I would cover the position in case it starts moving higher, and it will if the stock market sags really badly. I would cover it right at the 150. So I would sell right at the 147.80, and I would cover if it goes against me at about 150. If it breaks this 150 level to the upside, this stock just doesn't look as sexy anymore. And I've got something else for you. ZI. Now, don't confuse this with Zoom. This is not Zoom. This is Zoom Info Technologies, ticker symbol ZI. Now, if you want to see what this company does, it operates cloud, tech and cloud. What did I tell you about the cloud? Intelligence platform for information and insight on organizations professionally principled in the United States. Pre-packaged software. Folks, there's no stopping this sector. And look at this, 67% upside in 1 year. Nothing to laugh or sneeze at. Now, looking at the stock, again, it's also a 4x4 pattern. And I like how it's coming back up. And this thing only started trading middle of 2020, about summer of 2020. And look at where it is right now. It looks like it's breaking out to the upside. Looking at it closer, we have a 90-day price high. We have a pullback for 3 days. This is the opposite of what we saw on the TLT. A swing high, a pullback to the downside for 3 days. That means price closes lower for 3 days, and the 4th day starts roaring and breaking above the 3rd day low. It's exactly the opposite of what we're seeing here on the TLT, where when we have a swing low, the market closes higher 3 days in a row and then falls back down. Same thing here, but opposite. We make a swing high, we fall 3 days down, and then we start rallying again. And in this case, I would put a buy stop right around the 58.60 level, and I would put a stop loss right below this little swing low, this 51 level to the downside. Now, before I let you guys go, I got something important for you, and you got to pay attention to this. So pay attention. Time and time again, and I mean time and time again. One thing that's potentially preventing you from beating the stock market, but make this one simple change could trigger a flow of endless income. And I really, really mean that. Folks, I'm talking about a pre-market trading, and if you know how to do it right, and I mean really know how to do it right, you have the opportunity to triple your gains before the market even opens. In fact, this new strategy, this new pre-market strategy handed out 20 out of 22 trades that were winners. Folks, imagine winning 20 out of 22 trades. That's like taking 11 trades and winning 10 out of them. Posting winner after winner after winner. And this is as recently as November. So you got November, December, January, we're in February. 22 trades, 20 winners. All you've got to do is click on the link below and get all the details. Follow the link below, learn how the #1 pre-market trader gets his edge. You'll see me in there as well. You got to check this out. And make sure to subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when we post new videos. And most importantly, have an amazing weekend. Post some comments for me, feedback. Want to know what you're thinking. Bye. Have a great, great, great weekend. Take care.